Hello and welcome to NDTV Profit. Now, the Monetary Policy Committee is set to announce its decision tomorrow morning. Of the 44 economists polled by Bloomberg, 43 expect the MPC to continue to maintain a status quo on the benchmark lending rate. Teresa John from Nirmal Institutional Equities appears to hold the same view. She's in conversation with us today to share her thoughts and expectations from tomorrow's policy. Teresa, thank you so very much for taking time out for us today.
Thank you, Pallavi.
So we'll dive straight into it. While there are expectations of a status quo, and I believe you hold the same expectation as well, what more can we expect from tomorrow's policy?
Yeah, so for tomorrow's policy, we are also expecting that the RBI keeps rates on hold and they also maintain the stance of withdrawal of accommodation. So while the liquidity has tightened quite significantly when compared to the previous meeting, and also the RBI has announced some macroprudential measures in the interim between the two policy meetings. They've increased the risk weights on consumer unsecured loans, as well as bank lending to NBFCs for certain categories of NBFCs. So it's likely that they will, continue with those measures. So inflation, we are expecting that inflation could actually go back up to 6% in November. So this is our expectation based on the fact that your food inflation has gone up again, mainly led by higher prices of onions and tomatoes. So from that perspective, it's probably too early for the RBI to turn dovish, given that inflation continues to remain quite volatile. Core inflation remains quite benign at 4.2%, but the headline inflation is equally impacted by the food prices. So I think RBI will remain cautious and watchful even at this point in time.
Okay, so taking forward the expectations on the inflation and the growth forecast front, we saw stronger than anticipated figures for GDP growth for Q2. And like you said, inflation, however, going forward is likely to see a little bit of an uptick for November after coming in within the central bank's target range in October. So can we expect any revisions on the inflation forecast front and GDP growth in tomorrow's meet?
For GDP growth, I see, quite high probability that it will be revised up because most likely the RBI will not change their forecast for third and fourth quarter, but just given that there's been nearly 100 basis point surprise on the RBI's growth forecast for the second quarter, that probably warrants an upward revision on their numbers from 6.5%. On the inflation front, it's likely that inflation again comes off in the coming months from December to March once this food inflation cools off. So they probably might maintain the inflation forecast while revising the growth forecast upward.
Okay, so on the inflation front, again, like you said, that we've seen a little bit of an uptick in inflation for the month of November, but it's expected to see a bit of a cool off here on for December. So tell us a little bit about it. So, for instance, Rabi sowing trends, and the reason I do want you to elaborate a little bit is also that agri GVA, for instance, came in lower in the GDP growth print. There have been concerns because of the southwest monsoons and their distribution that the Rabi sowing trends might also see a little bit of a change from normal. So far, there is a little bit of a lagging in Rabi sowing up until I think the 1st of December. What's that looking like, and what's the impact that may or may not have on inflation?
Right. So it's basically because that the monsoons have been quite erratic, that the Kharif production estimates itself have been on the lower side. That is reflected in the GVA numbers, which came in at around close to 2%. But that's lower when you look at the trend over the last few quarters and years. And even the Rabi sowing is down by around 5% year on year. The main Rabi crop, which is wheat, is also down around 5% year on year as on date. The reservoir levels are also slightly below normal, but in the northern belt, which is the key Rabi belt, the reservoir levels are actually slightly above normal. It's mainly in southern India that the reservoir levels are below the last year. We're seeing the lower Kharif output. So states like UP, Haryana have not done too badly on the Kharif rice production, but mainly states like Andhra Pradesh and Karnataka have lower rice production. But overall, the country as a whole, the production is estimated to be lower, and that is actually pushing up cereals price. Output, the Kharif output has been delayed and is not yet hit the market, which usually it happens by around November, early November, which has not happened this year. So yeah, the higher in food inflation that we are seeing is largely an impact of the erratic monsoon, and it's possible that this continues. I mean, we may end up with a Rabi slowing, which is better than current levels, but maybe slightly below earlier expectations.
Okay. And how does all of this tie in with cereals and pulses inflation? That has been a bit of a pain point for us last several months in the ongoing year. Is that expected to finally sort of subside?
No, the pulses inflation will continue because pulses, the Kharif output was down by around 9% year on year. Even the Rabi is still lagging a bit. And not all of the pulses which are grown in the Kharif season are grown in the Rabi season. So in those few pulses, like for example, the what do you call tur dal, there is a substantial. The Kharif sowing was lower, and the Rabi will, or the crops that coming after that will not make up for the decline in the Kharif production. So I think the only way that the Kharif or the entire pulses prices can be kept, maybe not low, but at least managed, is through higher imports, and I think the government is already planning on that. But so in the near term, you will not see a decline in pulses inflation. Cereals inflation also, I mean, it will not be as high as pulses inflation, but I think there could be some upward pressure, but not significantly, is what we think.
Got it. Okay, so while all of this does sort of make the case for the RBI to continue to remain cautious on the inflation front, on the external sector front, it can definitely derive more comfort, right? Crude oil, for instance, is trending at the lowest we've seen in quite a few months. So how's the external sector outlook looking? It's definitely improved since the MPC last met. Would that be correct?
That's right, because crude oil prices have come down. So we don't see much of a risk from crude oil prices going forward, because if you're going to a global growth slowdown, it's very unlikely that prices kind of flare up from here. Geopolitical tensions remain, so you may not see the kind of decline you usually see in a global growth slowdown scenario, but we don't see much upside from here as far as crude oil prices are concerned. The current account deficit itself, we are expecting it to be around 1.5% of GDP in FY24. In the second quarter, our estimates suggest that it will probably be just under 1% of GDP. So, yeah, the external sector remains quite benign. We've seen a sharp increase in the trade deficit in October, mainly driven by higher gold imports, but I see that as more of a blip than something that is going to sustain.
Okay, all right. And I do want to ask you a little bit about what we can expect tomorrow on the liquidity front. So, liquidity has remained tight, and would it be fair to say that that's the outlook going forward?
Yeah, so if the RBI doesn't do anything, because you probably will see a relatively tight liquidity scenario going forward. Uh, the governor had announced that they would probably do OMO sales to suck out liquidity in the last monetary policy meeting, but I don't think that is warranted at all given the current liquidity situation. You might see some improvement in liquidity if government spending picks up, but I think there is an offset on two fronts. That one, because this is election year, so currency in circulation generally tends to go up. Even post the festive season, the currency in circulation could remain on a relative basis. It could remain on the higher side. So that could actually keep liquidity tight. Secondly, we are not really sure about how the FPI flows are going to pan out over the next couple of months, at least until March. So I think that is something also we remain to be watchful about. They have FPI flows have picked up in November, but I don't think we will see very significant inflows at least until March. Beyond March, you have the bond inclusion, the JP Morgan bond inclusion for the Indian bonds. So that could support some of the FPI flows beyond March, but at least in the near term, I think FPI flows also could be relatively challenging. So on those two fronts, I don't see need for OMOs as the governor has actually announced on how they intend to take it forward. I think we'll watch for the commentary tomorrow.
Got it. Okay, one last question. What's the reading on high frequency indicators looking like at this point? So Q2, like we discussed, surprised on the upside in terms of GDP growth. And in Q3, because of the festive season, we have seen fairly resilient, strong economic activity rather. So are all high frequency indicators also indicating to that?
So October has been good, supported by the festive season, or at least are the high-frequency economic indicators. The month of November, we've seen some slowdown, for example, in services PMI and some of the other indicators that we track or on a fortnightly basis. We are seeing some sluggishness coming through post-festive season. If you look at the commentary from FMCG, consumer durables companies, etc., the festive season has been good on a year-on-year basis because the base last year was low.
Right.
The festive season was, came a month later this time. But overall, the sales have not been as good as expected. So going forward, we are a little cautious on the growth outlook. But that said, October has been good, but I think November we are seeing some softening.
Okay, got it. All right. Thank you so much, Teresa. This was most informative. Stay tuned to BQ Prime and NDTV Profit. We'll continue our coverage of monetary policy tomorrow morning.
Thank you.
Ma'am, thank you so much.
Thank you. Thank you.